How am I to go there? How am I to go where? How am I to go up front there? How am I to go? How am I to...
The real estate investment strategy that makes money. So welcome back. Now, my name is Ted Thomas, and I've been involved in tax liens and tax deeds for about 30 years. So today we're going to talk about real estate and making money. Now, everyone wants to make money, and in the past 50 years, well, residential real estate has done quite well for the average investor. Now, newcomers, they want to get into real estate, and they want to use leverage. Now, what's that all about? Well, leverage is when you pay a certain amount down and then the bank lends the rest of it. In other words, a small down payment towards the balance and then the rest of it's going to come in from the bank. That's leverage, okay? So real estate is a primary method where most people want to get involved today because the stock market's going up and down like this. Now, I'm not saying real estate doesn't go up and down, but rental real estate is relatively stable. So most people start out as a residential real estate. They want to buy it and they might want to own it, or they might want to buy it and own it and rent it. All right, but then we have other classes of investors. What would they be? Well, for example, there's a group now called flippers. Now, what are flippers? Well, they're people that want to buy the property and then relatively quickly they want to do something. They see the property as a quick profit, so they want to buy it and then they want to flip it to the next buyer and they make a profit and move on quite quickly. All right, now they see the property as being undervalued, so that's kind of a risk business because if it isn't undervalued and they have to hold on to it, they're not going to make a lot of money. So rentals are a large part of the real estate world. Why? Because a lot of people think that they can buy a residential property and they can rent it. All they're going to have to do is make a big sign, put it in the front and say for rent, and they're going to get rich. Well, it usually takes a little bit more than that. But what people are attracted by is the leverage. In other words, they can put down a small down payment and then borrow the rest of it from the bank. And then when they have a tenant in place, the tenant's going to pay most of those payments. So in today's episode, I'm going to talk about the residential real estate investing strategy that makes money. And I'll be right back. Okay, for sure, many of these strategies make money in real estate, and you'll want to use some of them. Now, I don't know where you are as a real estate investor. Maybe you want to do this in the stock market with the REIT. They call them REITs. Now, those REITs are investment trusts, and you can get involved, and you're actually a stock market investor because you're actually buying stock. Okay, other people like to do it in syndications. Now, the syndications work a little different in that they'll pass on the write-offs, in other words, the write-offs for depreciating the real estate, and they'll pass on the cash flow. All right, so that's another game that people like to play where they can get depreciation and get capital gains at the same time. Now, the security guys, they're in the marketplace, and they like to form, many of them like to form small mutual funds, and then what they like to do is they like to buy real estate and hold it, and they hold it for a certain period of time, then they sell it and return all the money. Now, mutual funds really like office buildings and things like that because they don't want to have a whole bunch of people in property management. And what they really like to have is a lot of long-term leases. So people really like commercial for the long-term leases. All right, now many people that do prefer those long-term leases, they just want to have a hands-off investment. So today I'm going to talk about real estate that comes down to tax defaulted real estate. All right, so this is one type of asset, okay? There's a lot of different kinds of things that you can do in real estate. So depending upon your point of view or who's writing the article or who's teaching you, they're going to be partial to certain kinds of real estate. Now, I have a very narrow view of real estate. I only want to be in tax defaulted real estate. Why? Because I know I can buy it right, and I know I can sell it quickly, and I know I can make generous margins. In other words, the difference between my buying point and my selling point, there's a generous margin there. And I'll teach you that as we go along today. So my name is Ted Thomas. Over the past 30 years, I've been involved in a subset of the traditional real estate. Now, what's traditional? Well, that could be vacant residential lots, it could be homes, it could be small apartments, could be small office buildings, it could be some small acreages. Those are all basically traditional real estate. Well, the subset of that I'm involved in and I'm a specialist in is really tax defaulted real estate. So that's those same properties, except people haven't paid the tax. So you kind of get the idea. So full disclosure, that's what we're going to talk about today. I'm going to talk about a strategy that makes money. It's a part of the real estate business that makes money because we can buy it low, we can sell it low, and we can make profits doing it. And I'll cover that on this video. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. So this subset involves a lot of real estate. Why do I say that? Because not a lot of people are involved in it, number one. And number two, it's available in 3,000 plus counties across the United States. All right, so it's a subset of the traditional real estate, and these are properties that the property owner did not pay the property taxes. All right, so what's different? What's different is these properties have gone into default. Now, what does that mean? Well, that's a serious problem, not only for the property owner, but also for the local county, and I'll tell you why. All right, so this is a huge opportunity for a knowledgeable investor that learns how to do this because the yields are so high. These properties are going to be sold at tax defaulted auctions.
How better go there? How better go there? How better go where? How better go here? How better now?
For a lot less than the assessed value of the retail prices. All right, so nationwide, there's over 3,000 counties. Now, the treasurers in those counties and the tax collectors have been mandated by the legislature that they have to levy the tax, they have to try and collect the tax. If they can't collect the tax, what they do, after giving multiple notices of default and going through the due process of law, they are going to seize that property. In other words, they're going to confiscate it, take it away from the property owner, and then what are they going to do with it? They're going to sell it at a tax defaulted auction.
All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? How better go $1,000? Open it up.
Now, I can assure you this is not a glamorous business, but it is honorable, it is ethical, and it's not very well known. So there are competitors, there's no doubt about that, but it's not as competitive as the regular real estate. All right, now the local county is in the business of running the county. So now what do they have in their hands? Well, they have properties that are defaulted, and they don't want those properties. So what are they going to do? So they're going to authorize the treasurer to sell those properties at auction, and they're going to sell the properties to recover the back delinquent taxes. That means that auction could start at the back delinquent taxes because the treasurer wants money to pay the county bills. Now, what do I mean by that? Well, the county bills are substantial. They have to pay for the schools, the police department, firefighters. They're going to have to pay to fix the roads. They're going to have to pay the county employees. You're getting the idea. So the county needs money right away. So if people don't pay the tax, well, the consequence of that is they're going to lose the property. However, another consequence is the county's got the property, they don't want it. So sometimes they'll sell those properties with a starting bid of $100. All right, so now let's talk about this. All right, you'd love to buy a property for $100. They might start at $100, but they're always going to be sold to the highest bidders. All right, now there's going to be a lot of properties at tax defaulted auction. All right, now in small population counties, they're going to have dozens of these properties to sell. They could even have 100 of those. But in a large population county, they're going to have hundreds and even thousands of these tax defaulted properties. All right, every county across the United States, there's more than 3,000 counties, every county can sell tax defaulted property. So as I say, sometimes it's just 100, sometimes it could be as much as 1,000. Sometimes the auction will start at $100, but I can tell you it'll start at a low price. So here's the game that you're playing. You're basically trying to buy it low, then you want to sell it low so you can sell it quickly, and that margin between the price that you buy it and you sell it, That's where you make the money in this business. Now, this has been around for a long, long time. It didn't just get started. It's been around for over 200 years. So the tax collector and the treasurer are going to try to motivate people to buy. So they're going to bring the sale online at very low prices. But that, I mean, it could be $100, could be even just the back taxes, but you could just about plan on 10 or 20 cents on the dollar. All right, now every property has a tax assessed value. Tax assessed value is way up here, but they're starting way down here. So that means these properties are being sold for 60, 70, and 80% below the tax assessed value. 60, 70, 80%. Folks, if you could buy a property for 10 to 20 cents on the dollar that was slightly abused, and you could buy it for that kind of pricing, could you put a sign on the front lawn? Could you put it on Craigslist? Could you put it on eBay? Could you Trulia, MLS, and sell it for 50 or 60 cents? So you bought it for 10 or 20, sell it for 50 or 60. Well, you get to make that margin. Who would you sell it to? How about a guy or gal that wanted to do fixer-upper? How about those flippers that want to find a bargain and sell it quickly? How about those people that they're renovators, they find a mediocre property, they want to make it into a mansion? So there's lots of market out there to sell. So the county needs the money. So what they're going to do is they're going to discount the property. But how about you? If you can make the margin, then you can make nice profits to be able to take care of your family. So you're kind of getting on. This system works, and it's been tested, and it's been perfected in the trenches with real deals when big money was on the line. Now, this works because it's a proven strategy, and you can do as many of these as you want. You can buy all across the country, and you can do it online. Over 3,000 counties are online. So it's up to you. You can decide how you want to do it. Now, throughout these videos, I include some interesting examples of what I've been able to show other people to do. So as you watch this, pay close attention to the buying price and the price that it was sold at. So I'm talking about a case of a small county, actually a rural county just north of Tampa, Florida. And my student bought a property there for $9,100. It was slightly used and abused, but it was absolutely overgrown with trees, and people didn't want the property. So he bought it from the tax collector at auction for $9,100, but it was tax assessed at $91,000. Wow, that's quite a difference. So he bought it for 10 cents on the dollar. Now, using the techniques that we teach in the class, he learned to go out and look and find comparable values. He determined that the price was worth a lot more than the $91,000, maybe even closer to $150,000. And so what did he do? Well, again, he learned how to sell the property. So he sold the property, got a small down payment, and he sold it on an option to buy. So that means he got a down payment to buy it, and the people are going to pay him the rest of the option through the next few years. So he sold it for $150,000 with a $5,000 down payment. All right, now that student's going to get paid money on that property for the next years while they pay out that option. Now, are they all going to be that good? Well, of course not. So tax defaulted property is nothing pristine about it. It's not painted, doesn't smell good. I'm going to tell you there's going to be plenty of junk out there. Don't buy the junk. But there's other properties that could be cleaned up, made to be good looking, make them a pretty house again, and they'll sell, and they sell relatively quickly. Who do you sell to? Well, you can sell to anybody you want in the marketplace, but believe me, there's a lot of flippers out there, there's a lot of fixer-upper people out there, and there's a lot of renovators out there. Plus, there's a whole group of people that need financing that are out there that need help. So this system has been around for over 200 years, and there's over 3,000 properties that are auctioning these properties right now. Don't get me wrong. I'm not saying dealing, buying, and selling tax defaulted property is just complete easy street like falling out of a rocking chair. It's not that easy, but I can assure you it's an exciting business, and there's lots of work out there because there's so many tax defaulted properties nationwide. There'll be over 2.5 million of those. Now, I do want to remind you, if you're going to buy property, don't buy a property at auction unless you've seen it. Why not? What if there was a hurricane? What if there was a windstorm? What if it was next to a pig farm? What if it just rained a lot and there was flooding? You don't want to buy any of that. If you buy a property and it's damaged, you're going to end up owning it. So that's a big mistake that you want to make sure that you don't make. The other big mistake is don't buy a property unless you already have an exit strategy. I'm Ted Thomas. I'll see you in the next video. Don't forget, request your free auction list right below me.